Welcome to System Initialized Data-Backed Candlestick Patterns. We're loading April 2026 market data, cutting through the social media noise, and plugging into community-tested frameworks built by real traders. What you're about to see isn't hype, it's structure. In April 2026, 80% of viral finance TikToks were flagged as misleading. 60% of those videos completely fail to provide adequate risk warnings, earning a grade of F, and 70% dangerously oversimplify market mechanics, earning a D-. The algorithm rewards hype, not accuracy. And the result is new traders blowing their accounts. The Fintok way promises get-rich-quick schemes, treats trading like lottery tickets, and pushes opinion-based calls. The terminal way is built on data-backed setups, strict discipline, and journaled trades. We rely on real trader journals and statistically validated setups tested daily in the trenches of communities like Reddit's r/Daytrading and r/Forex. The first pattern is the Bullish and Bearish Engulfing, carrying a win rate range of 58 to 67%. The core psychology is straightforward. Buyers or sellers overwhelm the opposing side in a single session, signaling a decisive momentum shift. Visually, a large candle fully engulfs the prior candle, representing complete sentiment rejection. For this setup to qualify, the engulfing candle must fully close. No jumping on wicks. Price must be at a support or resistance level tested at least twice, and volume on the engulfing candle must exceed 1.5 times the recent average. The higher time frame cannot be in a strong opposing trend, and this discipline is exactly what produced a 67% win rate across 347 documented trades over 6 months on the 4-hour time frame, sourced from r/Forex journal data. The pin bar, also known as the hammer, posts a win rate of 61 to 69%. Its core psychology is the market rejecting a specific price level with immense force. The longer the wick, the more dramatic that rejection. When price slams into a support wall and snaps back, that long lower wick is the market speaking in clear terms. The pin bar combined with a moving average bounce is considered Hall of Fame material in Reddit trading communities. The setup requires a higher time frame trend alignment, so you're never catching a falling knife, a pullback to the 50 or 200 EMA, and entry strictly on the break of the pin bar high. Your stop loss goes strictly below the lowest wick, targeting a 1 to 2.5 risk-reward ratio. The morning and evening star is a 3-phase pattern with the highest reported win rate in this system, ranging from 63 to 71%. Phase 1 shows the current trend in motion, Phase 2 is the star, a moment of total market indecision, and Phase 3 is the momentum reversal. The core psychology is trend exhaustion followed by a swift, undeniable reversal. Execution on this pattern is non-negotiable. Entry is only triggered when the third candle fully closes, not before. The most effective locations for this setup are after extended market moves or at known support and resistance zones. Your target zone requires a minimum 2-to-1 risk-reward ratio, or the next structural key level, with the stop loss placed firmly below the pattern's low. Here is the complete proprietary diagnostic matrix summarizing all 3 patterns side by side. The Bullish and Bearish Engulfing wins 58 to 67%. And its golden rule is volume must be 1.5 times the average. The pin bar wins 61 to 69% and requires the lower wick to be 2 to 3 times the body. The morning and evening star tops out at 63 to 71%, with the non-negotiable rule of entering only on the third candle close. Building a 60+% edge requires a 3-tiered foundation. At the top are patterns and multi-time frame analysis, the tools using higher time frames for trend and lower time frames for entry. The middle layer is strict risk management, the shield, capping risk at 1 to 2% per trade with a minimum 1 to 2 risk reward. The base and most critical layer is emotional discipline. No revenge trading, no over-leveraging. This is the part Fintok will never tell you. Without the base, the entire strategy collapses. The trader's graveyard maps the 4 fatal mistakes across emotional and financial risk. Overtrading bleeds capital slowly through boredom-driven setups. Revenge trading, chasing the market after a loss, sits in the highest risk quadrant of all. Refusing to adapt locks traders into static rules during changing market regimes, while over-leveraging bets too much margin on a single so-called sure thing. The only antidote to all 4 traps is structured education and relentless discipline. 2 resources are available to take this further. The TrzeFxPRO training class is completely free via Google Meet, where real-time chart analysis walks you through these exact patterns playing out in live markets. For a deeper dive, the Candlestick Mastery Guide is available for $3 at beacons.ai/Jerome_digital_shop, covering every pattern, real setups, entry and exit algorithms, and proprietary risk frameworks. Stop relying on Fintok lottery tickets. Start trading with data.